This content is brought to you by Link2, which makes private equity investment easy. Link2 allows you to get access to companies before they go public, before they do an IPO. Within their portfolio includes fintech companies, artificial intelligence companies, as well as crypto companies. Some of the big crypto companies in their portfolio include Circle, Ripple, Polysign, Chainalysis, Dapper Labs, Ledger, and many more. So it's a great way to diversify your portfolio to get access to equity. So you may invest in crypto, stocks, ETFs, but now you can get access to equity in these companies before they go public. And obviously that can be very beneficial from an ROI standpoint. So if you'd like to learn more about Link2 and diversifying your portfolio, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Caitlin Long, who's the founder and CEO of Custodia Bank. Caitlin, great to have you back on.
Hey, it's great to be back on. Thanks for having me on.
Yeah, Caitlin, I want to start with Custodia's lawsuit against the Fed. We know the Fed was trying to get this case dismissed. What's the latest there? And also, in addition, I guess a secondary question would be, is this related to Operation Chokepoint 2.0, the delay?
I can't speak about the lawsuit. What's publicly available is the timeline, which is that we're in what's called the discovery process now. There were multiple attempts to have the lawsuit dismissed that the Fed failed to have dismissed. So we're in discovery, and that discovery process is scheduled to end mid-December, and there's a trial date set for April. Is it part of Operation Chokepoint 2.0? Yes. And we have the receipts, so to speak. We actually do have evidence that Custodia got caught up in Operation Chokepoint 2.0. Yes.
Wow. So, Caitlin, is this all of this coming from the Fed because of the control of the money, and essentially they view stable coins and cryptocurrencies very disruptive to the money printing system, how the Treasury handles things and so forth? Is that the gist of it?
I don't know. I mean, certainly we know in our case the White House was involved. Why the Fed coordinated with the White House? I don't know. The Fed's supposed to be independent. Honestly don't have any insight into that. And I would invite journalists to go dig into that because I'm curious myself. But we honestly don't know. There is a clear incumbency bias. It is public knowledge that Custodia, after the initial denial by the Fed, resubmitted its business plan to be exactly what the Fed had approved Bank of New York Mellon to do just months before, and then voted Custodia down a second time. So I think the real issue is the incumbency bias in the Fed. Today there was a Fed action against Moonstone Bank, which was another way the crypto industry was trying to get durable banking relationships. And it was the backdoor way, so to speak. It was the pull the wool over the regulators approach. It's called in the bank regulatory world a charter strip, where somebody goes and identifies a teeny tiny bank, and Farmington State Bank, subsequently changed to Moonstone, had 2 employees and a very small balance sheet. So really just the sort of what a developer would call the tech debt, right? What you're inheriting when you buy a tiny bank like that is pretty small. And so then what they do is buy the bank, close the acquisition, and then wait a little bit of time and then massively change the business plan. And it is a way that you can essentially, or it has been up until now, a way that you can cut corners that de novo bank applicants like Custodia had to face. And look what happened. Moonstone was able to do it for a year and before the regulators caught up to them. Sure. And so I know that there are multiple charter strip attempts happening. I am not going to out anybody, but I've told folks when they've told me they're buying tiny banks and they intend to change their business model and do crypto, it's not going to work. You're better off going through the proverbial front door like Custodia did and being very transparent. Right. But their response is, look what the Fed did to you. You did everything right. You tried hard to work with the Fed, and they disparaged you. They set a record in the amount of confidential supervisory information they've ever disclosed about an applicant. The order was 86 pages. The previous longest denial order, I believe, was 3 pages. So, I mean, the Fed clearly sent a message that it just doesn't want any of the crypto companies coming to try to get into the system. And I agree that they should have closed off the charter strip loophole. I'm surprised it took as long as it did. I'm glad they closed it off. I would salute them for that because I don't think it's safe. I've been warning since 2020 that there's a lot of bank run risk when you're dealing with fast settling liabilities, and it's just not a good idea to have those in the traditional banking system in a way that's going to cause a problem to the traditional banking system. I don't think either the crypto ecosystem or the traditional banking ecosystem should be hurting each other. And unfortunately, because of the way the regulatory approach has been taken in Washington, D.C., that's exactly what has happened. They've both hurt each other. And I lament that because there are ways to do this safely and soundly. Mm-hmm. But right now, it's really the biggest of the big guys. And that's the only ones that the Fed has let through. I'll let you conclude whether the ethics of that.
And this Farmington State Bank, also known as Moonstone Bank, it was connected to Sam Bankman-Fried and FTX, right?
It was.
Weren't they trying to acquire them, or they were the ones who acquired them? Is that correct?
No, they did acquire them. Okay. So here's the thing. So we have an advisor who's working with Custodia who spent her entire career at the Fed. And she wrote an op-ed in American Banker in December. And she said, look, the Fed should have caught this because they acquired Alameda, the affiliate of FTX, acquired 80% of the equity of Farmington State Bank, aka Moonstone Bank. And that tripped the control rules that she herself helped write at the Fed. And they should have applied, they being FTX, should have applied for approval from the Fed to make that acquisition, and they did not. Now, what is interesting is that the Fed didn't discuss that point in its cease and desist order today. Also, Jay Powell met with Sam Bankman-Fried for 1 hour just weeks before that March 2022 acquisition made by Alameda of 80% of the equity of that bank.
Wow.
I have no idea what they talked about, but not a lot of people get a full hour with Jay Powell, and Sam Bankman-Fried did.
Well, Caitlin, that seems to be the theme now that the dust is settled here after the collapse, and we're seeing all these information coming out from the Sam Bankman-Fried being put on trial and so forth, because Sam Bankman-Fried met with the SEC. FTX officials met with the SEC. They met with the CFTC. Now, I didn't even know Sam Bankman-Fried met with the Fed, Jerome Powell. I mean, that is
for an hour. It was so funny. Go look at Jay Powell's calendar. It's public information. Like Larry Fink gets 15 minutes with him, but Sam Bankman-Fried gets an hour. I'm like, wow. Wow. Yeah. And again, who knows what they talked about? But the timing is interesting, right? He met with Jay Powell. I looked it up again today, February 1st, 2022. And Alameda closed on its 80% acquisition of the equity of Farmington State Bank in March 2022, just weeks later. Yeah.
I mean, to your point about, they've both, the crypto industry and the government have both hurt each other in certain ways. Boy, I hope we can clear all these things out of the way and move forward on a better footing, because what a mess.
It is a mess, but the problem is the regulators don't seem to want it. I'm back. The Biden White House, crystal clear, right? The whole all of government approach to crack down on the crypto industry in the United States. We have two players that are really the proverbial good guys. I would say Coinbase with the SEC and Custodia with the Fed, who did everything right, literally begged to become regulated, and everything transparently. And it's almost like the strategy of the government has been to particularly harshly treat those who did try to come in and work with them and did try to help them.
Wow. And, to your point, the juxtaposition of that is you applying for the license and the Fed is pushing back. yet they approved BNY Mellon.
Yeah.
PayPal gets approved to push their stable coin forward. You have BlackRock and these folks filing for Bitcoin spot ETF, yet the startups such as Grayscale and so forth were denied. So to your point, there seems to be a clear bias towards the incumbents, the TradFi incumbents.
Well, I mean, that's been true before crypto, but what crypto has laid bare is just the extent of it, right? How is it the Bank of New York Mellon, with exactly the same business plan, sails through, and the startup with exactly the same business plan gets denied in a nasty way, with disparaging and, again, like factual inaccuracies that the Fed refused to correct, right? So it's pretty clear that the Fed was sending a message. And I'm actually gonna break a little news. We actually got some back channel guidance from the Fed that we should apply to become a member bank. And then after we did, we got some back channel feedback that was a good move. And then there was a Fed governor who told a very powerful official that one of the Wyoming Speedy Banks had distinguished itself because it applied to become a Fed member bank. So we honestly had good reason to be optimistic throughout the whole process. We had no negative body language, so to speak. And then when I said we were blindsided by the decision, we were blindsided by the decision. And so, again, we were lured into the and again, they used the everything they found in the membership application process, which we didn't have to do. Again, we distinguished ourselves because we applied to become directly federally regulated. They gave us only one shot. I know of multiple. Really, the traditional path for the Fed is to give startup banks two shots because you never get everything right the first try. Sure. And in one case, recently, they gave the bank a third shot, but they only gave Custodia one shot. Why?
Boy, sometimes, when I hear things like this, it makes me lose faith in government a little bit.
Yeah. I mean, because we literally did everything right.
Right.
Yes.
Wow. So, yeah. Caitlin, I would love to get, what's your mindset? Obviously, you guys got this lawsuit. You're going to keep fighting. Are you optimistic that, look, in the courts, we're seeing now the courts are being the balance to the overreach by regulators and the bureaucrats and so forth? For example, the Ripple ruling, with the Coinbase versus SEC and so forth. You have your case against the Fed. What's your timeline or horizon? What are you thinking? Like, this is all going to ramp down?
Well, for one thing, we're talking a lot about the lawsuit. Custodia is now a launched operating bank. So we're not launched and operating in all states. I would encourage you to check our websites for the disclaimers. We're not able to offer all products in all the states that we're operating in, but we're operating. Okay, so obviously with one hand tied behind our back, it's not our original business model. And we are continuing to pursue the master account that the law entitles us to have, because Congress literally requires the Fed to service all eligible depository institutions. The Fed determined Custodia is an eligible depository institution. So therefore, I'll let you fill in the blank, right? But here's the thing: we're waiting for that, but we are in the while we're waiting for that, we are an operating bank. And boy, there's a backstory. There's a lot I can't tell you. I disclosed a little bit of what happened today with these, back channel messages that we got from the Fed during the application process. Wink, wink. Apply to become a member bank, and then that was a good move, and then they used it against us. Right. So, I mean, that kind of stuff, we were ready, frankly, at this point. And I did say publicly that that we told the Fed in December, this is public information, discernible from the public information, that we were going to remediate a list of tasks that it asked us to remediate. And we did it all. And we did it all on the timeline. That's not publicly disclosed, so I can't say what the timeline was, but we did it all. All except for one, which we couldn't do until we had live transactions. But we took it very seriously. We didn't have to. Our main regulator did not require us to meet that high bar. And we used the phrase that the bankers will understand: a regional bank style risk management program. Now, if you're not a banker, you don't understand what that means. But regional banks are among the larger banks in the United States with more sophisticated risk management programs. And we got that in place before we took our first deposit. So we did it all. And here we are. But we're going to continue to operate, and we're going to see where the chips may fall. And what I'm most excited about is that we are on the verge of getting Bitcoin custody live. And I can't give a specific date because that's subject to regulatory approval, and we're not in control of the regulators' calendars. But I did confirm that we did submit our readiness notice to our primary regulator. And there are a lot of things they have to do to check the box, including a pre-launch exam. Again, banks have a very high standard that we have to meet, far higher standard than non-banks. A lot of the tech companies will just move fast and break things. That is the opposite of what a bank does. A bank has to move very, very carefully. But long story short, we are live, and in ahead of the Bitcoin halvening, we will be ready to scale. And we're going to be bringing things to custody, Bitcoin custody, that are not available in the marketplace today. There are only really Bank of New York Mellon and Anchorage are the only two banks that offer bank protection, and Anchorage is a trust bank. It's a different animal. But what I'm alluding to here is if you're using a custodian that is exempt from federal bankruptcy court, which only banks are, then they give you better protection. We're watching what's happening now with the failure of Prime Trust. All the Chapter 11s, for example, the custody assets in Celsius were deemed to be owned by the customers, which is what you all expect when you're putting something in a custodian. You expect that those assets are going to be yours, but the judge wouldn't let the customers take them. And here's the point: they agreed to take a 27.5% haircut in order to clear all the potential for preferences and other things that would cause a delay. So in spite of the fact that the custody customers were deemed to own all those assets, they volunteered to take a 27.5% haircut just to get the money out now. Okay, that's the kind of stuff that can happen in Chapter 11. And so bank protections where you can't end up at Chapter 11 and the receivership regime is much more customer friendly, we're bringing that to the market, but we're going to bring something else to the market that doesn't exist in Bitcoin custody. And I'll just tease that. I'll leave that teaser with everybody there. It is a nod to how Bitcoin itself works. It is a nod to self-custody for those who can't legally self-custody. Our custody design is different. It is designed for the long-term holders who are true Bitcoiners, not necessarily the short-term speculators who will move in and out of their position dozens of times a day. But it is designed to respect Satoshi's view of property rights, and that's what Custodia is going to be bringing in our Bitcoin custody. So stay tuned.
That is exciting. I can't wait to see that roll out. So. Silly question for you. Is it both for retail and institutional that your service that you can provide?
Only institutions, and again, only in certain states. So it's going to take us a while. So I just want to manage expectations. We're not going to be able to do everything in all states for a little while, but stay tuned.
And would the plan be to eventually open up to retail too, or that's maybe 10 years from now or something? I don't know.
Yeah, it is public information that it was in our business plan and our charter application that we eventually plan to serve individuals with high account balances. But once you move out of serving businesses into serving consumers, there's an entirely new, massively ratcheted up compliance program that you have to put in place. And we have not put that in place yet. So that's why we're not intending in the near term to serve individuals. We're focusing on businesses. Because again, if you look at where we came from, the executives of this company came from working with corporate treasurers, right? We worked with pension funds as well. This is the big fiduciary money, the long-term holders, not the hedge funds.
Right.
It's the long-term holders, and that's what we're aiming to build a custodian for. It's truly the institutional player, where a fiduciary who might have, for example, an ERISA fiduciary in the U.S. pension system has personal liability. They're going to want to have the belt and suspenders best legal and regulatory structure, among other things, when they choose a custodian. And I know that because I've been personally sued for billions of dollars as a fiduciary of Morgan Stanley's pension fund during my career. But those lawsuits didn't go anywhere. But long story short, it focuses the mind when you're personally named in multi-billion-dollar lawsuits. And that's the point. You have personal liability in corporate pension funds governed by ERISA. And so this is the reason why the fiduciary asset managers generally don't do business with non-banks when they look for custodians. They want banks because banks give them special protections.
Yeah, that absolutely makes sense. So speaking of Bitcoin, and I know over the years we've spoken, and you're not a fan of the ETFs, but we got to talk about BlackRock, throwing their hat in the ring for a spot ETF, as well as a bunch of other players. The line is growing, day after day. What are your thoughts on this, and when do you think we might see an approval?
I don't know. I mean, there is such an anti-crypto ethos in Washington, D.C. right now, coming out of the Biden administration. I doubt that it's going to go through. I'm not as optimistic as crypto Twitter is that we're going to see a Bitcoin ETF. And as you point out, rightfully, I think it's a double-edged sword. It definitely brings liquidity, but it also brings some of these Wall Street leverage games that tend to cause problems for markets. And I don't want to see those. I like the fact that Bitcoin was truly a pure free market up until we started to see some of the, not the Wall Street firms bring their Wall Street leverage games, but people like Sam Bankman-Fried bring his Wall Street leverage games, right? And look how much damage he did to the industry. So I'm not happy about those leverage games. I would much rather see a pure free market. But I understand that some folks are happy because they looked at when the gold ETF was approved, for example, and the gold price popped. And so that's what people are looking to trade. And I'm not against speculators, but I don't find that as interesting as the technology itself as a payment tool and as a tool of freedom, especially in countries that are experiencing hyperinflation. Holy cow, look at what's going on in Argentina right now. This is such a fascinating story. And it certainly hasn't, most of where I'm reading about it is on crypto Twitter. I don't think it has hit the mainstream press, just how much the newly elected president of Argentina is laying bare of the history of hyperinflation in Argentina and the approach that can be used to solve those problems.
And I know one of the things in Argentina, the candidate, the new prime minister, is pro Bitcoin, wants to move to the dollar. But could you see a country and other countries who are in a similar situation potentially not only make Bitcoin a legal tender like El Salvador, but also put it on their balance sheet as central banks put gold on their balance sheet?
Yeah. Oh, I think a number of countries already have, right? I mean, technically the US has, right? Because they get it through confiscation, through the Department of Justice, right? And then periodically they'll go and auction it off. But there's a difference between that and a country choosing to invest in it in its central bank reserves or its sovereign wealth fund. I think there's a lot more out there than you realize, though. I mean, there was just a survey that showed 19% of all New Yorkers, 19% own a digital asset. That's big, right? That's not adults. That's all New Yorkers, okay? Age, 0 to 110 or however old the oldest New Yorker is, right? Every New Yorker, statistically, almost 1 in 5 owns crypto. That's a big number. Okay. So, I think, that surprised me. And I think it would surprise us to know just how many countries' central banks and sovereign wealth funds own some of it. And part of the reason that I can say that, I don't have direct knowledge of countries and central banks, but I do have direct knowledge of corporations. Sure. There are some Fortune 20 companies that have owned Bitcoin for 10 years, and they just don't talk about it because they don't want to be associated with it. It's small, it's not material. And the way that they do it is they'll work with a company like Coinbase or BitPay or someone like that, that's actually transacting the Bitcoin for them so that it doesn't touch their balance sheet. but they have been early adopters. And these are companies that I had worked with before I left my previous career. And I started talking to them and introducing them to companies back in 2014. So that gives you a sense of how long it's been. And they never told me, but I subsequently learned from them in subsequent years. They didn't tell me at the time, but in subsequent years, I did learn from them that they were using it. And they were using it in countries without well-developed banking systems, so that they could move their money around. So you're talking about big global multinational companies that essentially do business in every country. And they've got to deal with moving money in and out of every country. And as you can imagine, there's certain not so well-developed countries that don't have well-developed banking systems for which it's just easier for them to deal in Bitcoin. And they're using it as an intermediary currency to get dollars back to the mothership. That's the basis upon which I would surmise there's more out there than we know, and it'll eventually come out and just confirm what we already suspect.
Caitlin, you sure you can't share some of those names?
Nah, I'm not. I'm not authorized to speak for them, and I'm not going to out them. The fact that they haven't outed themselves, it tells me they don't want to be outed, and I'm going to respect that.
Oh, for sure. But that's so fascinating because obviously publicly MicroStrategy, Tesla, and some other smaller companies. But boy, I would love to get a list of those names. That's so interesting. So you don't think BlackRock can sway the SEC and the regulators to get that spot ETF?
Yeah, I know everybody's all excited that BlackRock's coming in. It's so funny, we're a group of freedom-loving people, and then when one of the biggest, most powerful companies comes in, you start to see the industry going rah rah rah, and a lot of the rest of us are looking at it going, is this this kind of a crony capitalist approach to the world where the SEC gets to pick and choose winners? Isn't this not what we stand for? Right. But it is what it is. I understand why folks are excited. BlackRock certainly does have a history of being able to get ETFs through. But let me tell you, we've been discussing, I won't say in what context, the idea that ETFs are usually cash settled, right? You buy an ETF share, and if you want to redeem it, you either sell it or you redeem it for cash. Right. Typically, the issuer of an ETF will agree that it will hold the option as to whether to redeem it for the underlying, and it's really expensive for them to redeem for the underlying. Think about a commodities ETF, like an oil ETF, right? Most people who would want to redeem for the actual underlying have no place to deal with the storage of it. Okay. Right. But Bitcoin's different. So how about have an ETF where it's not just the issuer's option to allow redemption in the underlying, it's also the holder's option to whether to redeem for the underlying. That would be very interesting. And I think that can be done. It's not going to be done probably in that first wave, unless that first wave continues to get delayed, because the first wave is structured with very traditional structures, except with a trust company as custodian, by the way, not with a bank, because there hasn't been a bank that can do the custody. But yeah, we'll see. I think there are things that can be done because Bitcoin is different. It's a digital asset, literally, and it would be really interesting if the ETFs were offering a physical settlement option, not at the issuer's option, but at the ETF owner's option.
So, Caitlin, I don't know if I'm off base here, but given that Bitcoin's different, right, and it's on the blockchain, it's verifiable, we can see real-time analytics, with different transactions and wallet addresses and much more. Is there less manipulation that can happen versus gold and what they've done to silver and all these things? Do you think that's the case? There's going to be some level of manipulation from these Wall Street folks, but a lot less than the traditional.
Yeah. Here's the thing. There's a lot of the manipulation is not nefarious. It is inherent to the fact that Wall Street systems are not in sync with each other. And the SEC acknowledges this. And that's why it allows ETF market makers to make markets where they can actually issue more ETF units than they have underlying assets in collateral. And that is to basically facilitate liquid and continuous markets. The US made a decision that it favors liquidity over solvency in its securities markets. Okay. And this is where you get a lot of these distortions. Now, I think we ought to do away with that. We have the technology to do away with that. But there are some powerful incumbents. We've talked about this before with the Dole Food case, very powerful incumbents who like the fact that it takes 2 days to settle a securities trade. Okay. In today's day and age, with info moving at the speed of light, it shouldn't take more than a few minutes to settle a securities trade, but it's still T plus 2 days right now. Why? Because the whole system was set up for that. And now there are powerful incumbents who make money off the float. Those securities might actually change hands in those 2 days before they're delivered to you dozens of times. A US Treasury probably easily that, right? But now when you start to understand that the securities are always moving, and it's not like there's some slow walk to get them to you in that 2-day settlement period after your trade date. Now, okay, the world should be on crypto time, right? Which is pretty close to the speed of light. We're not there yet. And yes, I think we will eventually get there. But, a lot of when you start to see how all that transactioning is happening in those 2-day period, coming back to this question of nefarious leverage, with the systems out of sync with each other, a lot of that leverage is not even knowable to the parties. They don't definitively get that leverage. But, back in the 2008 financial crisis, people had no idea how long the so-called collateral chains were. It's all in the securities lending business, in pledged collateral markets, repo markets. Securities financing is generally the term now. They're all basically it's secured lending against a security, but you have the ability to rehypothecate. Okay, so this is how when you buy a treasury bond, you might think it's yours, but your broker's going to turn around and pledge that as collateral in their securities lending market, in the securities lending business. And then that broker's going to turn around and pledge it as collateral in their securities lending business, and so on, and so on, and so on. And that's how you get these long collateral chains. And nobody had any idea how long they were. I think if people had any better idea, they would have stopped the practice all way before the 2008 financial collapse. Now, we know through some of the work done by Dr. Manmohan Singh at the IMF that collateral velocity, which is essentially another word for how long the collateral chain is, collateral velocity has declined since the 2008 financial crisis, but it's still pretty high. There's still essentially 3 people who think they own the same US Treasury, and there's only one US Treasury. Right. So is that nefarious? Well, based on what I just described to you, you can see how these systems just get out of whack.
Sure. Do you think tokenization of these securities and bonds and so forth will help solve some of that with atomic settlement?
Oh, absolutely. That's the point. Yes, absolutely. You put it on a distributed ledger and you can check to see if your securities are actually still there. Yes, absolutely. That is the point.
Now, Prometheum is just, I think this week, Patrick McHenry and a bunch of Republicans sent a letter to FINRA and SEC regarding Prometheum. What are you hearing about them? They seem like another shady plant by bureaucrats. I don't know.
I thought that was an interesting letter, but I'm not really part of that, not paying attention, and haven't met any of the people involved. So don't have a good comment for you there.
Didn't know if you had any inside info on that one.
No.
So what were your thoughts on the SEC Ripple XRP ruling? Obviously, that was kind of split in the middle, but the industry saw it as a big win because the asset itself was
correct,
viewed as not a security, intrinsically not a security. It just depends how it's packaged, just like the orange groves and the oranges.
Yeah.
What were your thoughts on that?
I thought that was a sophisticated opinion. I thought that was a very interesting line drawn, and it was a right line drawn. That doesn't mean it will stand on appeal, But if we step back, the SEC is in a couple of what I would call bet the farm lawsuits. Other federal agencies are as well, that if they lose, they're going to lose power. They're going to lose jurisdiction, right? I mean, if investment contract is narrowed by the courts, the SEC doesn't have as broad a jurisdiction over non-crypto securities as it thought it did, right? So it's so interesting that crypto has caused so many people to lose their minds in the federal agencies and end up in litigation where the court system might decide that the boundaries of their power are not as wide as the agencies have been interpreting them. And the Ripple case is one of those. I think the SEC thought it was pretty clear that it was going to win. And it didn't. It was a split decision. But on the biggest issue, which is what is an investment contract and what's the breadth of it, it lost, at least at the district court level. Yeah.
I saw, as a result, this ruling was used by the folks like Senator Lummis, who obviously your home state, and to help pretty much try to push regulations through. She has a bill with Kristen Gillibrand, Patrick McHenry, and Glenn Thompson also put forth a bill to help provide the clarity to the industry. Any thoughts on these bills and how things have been progressing there?
I haven't watched them that closely, in part because what I'm seeing is that the White House dropped out of the conversations, and the White House is going to have to be at the table if legislation is going to move. So unless the White House comes back to the conversation, I'm not spending too much time on them because, like so many bills in a split Congress, that just don't go anywhere, even if they pass one of the two houses.
Oh, sure, yeah. So do you think it's going to be post 2024, it seems like, because the election year next year is going to be crazy?
Well, oh my gosh, yeah. It's sure shaping up to be absolutely nutty with strange bedfellows and just crazy stuff. But yes, I don't think anything's going to happen before then. But that's why, look at what's going on in the courts, right? I mean, and if you think about it, there are three equal branches of government. The founders of the United States, in their infinite wisdom, created checks and balances where they're equal branches of the government. And when Congress, is in divided hands like it is today, and divided, therefore, with the White House, you kind of get paralysis on legislation, which is what we were just talking about, not likely to move through. But what ends up happening is that the judicial system steps in to fill the void. And again, I think it's interesting that the federal agencies, because they have made this absolute freak out about all things crypto, have found themselves in the types of litigation that could clip their wings. Typically, federal agencies don't do that. They like the ambiguity as to what are the four corners of their jurisdiction. And they don't like the court system to maybe tell them their jurisdiction is not as broad as they think it is. But that's kind of what happened in the Ripple case. And there are others coming that could actually clip the wings as well, so to speak.
So I don't know if you've been following the Coinbase situation, but that one seems very ridiculous, in my opinion, given the SEC approved them to go public years ago. Any thoughts on that? And could that case get dismissed as Coinbase is trying to get it to?
Well, this is so interesting because back when the SEC's when the S1 went effective for Coinbase, my reaction was, oh my gosh, the SEC wouldn't have let them go public if they thought Ethereum was a security. And the securities lawyers I talked to at that point in time said, nah, that's not really true because it's a different part of the agency that allows the prospectus to go effective, and that as long as they disclose the risks, then they're okay. Okay, so but I also understood, like, wait a minute, the SEC's remit is investor protection. So how is it investor protection for one agency to essentially have two different viewpoints and reverse itself 3 years later? And how's a federal court going to view that? Is a federal court going to think that one division of an agency saying something is okay, while 3 years later, the other division of the agency says it's not? The agency is the agency. That's the entity, right? And so the first thing I saw when I saw all that was I talked to securities lawyers about exactly the question you're asking me. What's the implication of them having approved the S1? And the answer is, yeah, from a practical perspective, two different parts of the SEC didn't agree back then. But 3 years later, is a court going to defer to that distinction? There's not, let's put it this way, there's not a lot of case law where courts viewed parts of agencies who disagreed within the agency as different legal entities. Right. And it's not likely to be the case here again. You know, I'm not in the business of giving legal advice or making such predictions, but it's just interesting to see the route that was taken, because you're absolutely right. And when you think about the investor protection remit, overall, wow, that's it does seem like what the SEC is doing is inconsistent with its investor protection remit.
Yeah. And look, it's not even just Ethereum. There were a bunch of other altcoins Coinbase was offering at the time of going
Correct.
public. I don't know what, 30, 40, plus the staking services and all that. And I think even the judge in the Coinbase case is also calling out some of the things you were just saying, like, this doesn't make sense. Like,
correct.
And you're not able to tell us which assets are securities and which are not. It's just so messy.
Well, part of the reason is if they were sure they were going to win, they would have done it a long time ago. Mm-hmm. So that's the practical reality. Again, when I said federal agencies don't like to end up in litigation because there is a risk that they lose and that they have their wings clipped by the judicial branch. That's why they didn't bring these lawsuits earlier. Mm-hmm. So now they're in them, and here they are. And let's see how this all... It would be so ironic if crypto is the reason why certain federal agencies have their wings clipped by the judicial branch.
PayPal launched a stable coin on the Ethereum blockchain. So the stable coin wars are heating up. You got USDC, USDT. What's interesting is the NYDFS approved this, yet they told Paxos stop the BUSD issuance. So going back to the theme of incumbent bias, right? So what are your thoughts on this PayPal stablecoin move?
Well, as you know, I'm watching the Fed, and we heard through our tentacles at the Fed that the Fed objected to this, and New York said, "This is our decision, not yours," and they went ahead. So I think power to the states. The Fed doesn't have jurisdiction over everything, and certainly NYDFS saw fit to approve this and went ahead over the Fed's objections. Apparently, I can't prove that, but have been told by a reliable source that that's indeed the case. So, and a couple of days after that, the Fed released its novel activities supervision program. Hard to say what prompted that. But if you go back and look at the Custodia denial order, that door was slammed shut on any novel activities involving digital assets except for the large incumbents. And now it seems like there might be a crack open in the door, because at least they're putting together a novel activities supervision program. I was pleased to see that the Fed acknowledged that it needed to go outside of its skill set. They said to academics, to banking, to technology, to fintechs, to get advice on this. I would applaud them for that, because they need to.
Yeah, and on the topic of the dynamic between states and the Fed, so you see this trend continuing. The states leading, Fed, they may not be happy, but at some point they're going to have to work together and figure this all out, right? Maybe that's the point of where we get to regulations from a federal level.
Yeah, and I've never been an anti-regulation, as you know. Sure. I'm pro enabling regulation that respects property rights and tries to keep fraudsters out. That's what Wyoming built. It is for the special purpose depository institutions, but also even outside of those. Wyoming clarified the commercial law treatment so that we could collectively, the industry, know exactly what the rights and obligations of parties to a transaction were, so that if there was ever a dispute, a judge would have a roadmap for determining that dispute, and you can keep your court systems unclogged. But the special purpose depository institutions, of course, the bar is very high. They have to comply with all the federal banking requirements, plus all of the requirements for Wyoming digital assets.
Yeah.
And there's a lot. Go look. There's a 752-page supervisory exam manual for the Wyoming Speedy Banks. There are, I don't know, 30 pages of rules, actually more than that. And we just went through that at Custodia, all of the rules that we have to comply to and prove that we comply with those rules, including that the Division of Banking can force a Speedy Bank to prove not just custodial balances, but control of the custodial wallets, all of them at any moment. So no other digital asset company, including in New York, is subject to that level of regulation. But it's the right thing for customers to do. That's the point. And so, yeah, there's great regulation, but it's enabling regulation that says, okay, you can be a bank if you're willing to do all of these things if you want to hold digital assets. And that's enabling regulation. It's the approach that should be taken. And by the way, you mentioned Lummis Gillibrand early on. That is the general approach, as I understand it, that is taken in their bill. It's enabling. If you're willing to do these things, you get these charters. If you're not willing to do these things, then you're operating outside of the law. And I actually think this is the right way for Washington, D.C. to deal with this industry. It's clearly not going away. I know they wish it would, but it's not. So now that it's not, what's the right way to deal with it? You get people who know what they're doing and get them inside the regulatory perimeter and create a pathway for it to be inside the regulatory perimeter. And you bring in the experts. Like I said, the Fed has nodded to this now. They said they would bring in outside people who know what they're doing. Yay. And finally deal with this. So let's see what this all turns out to be in the next, 15 months between now and the next election.
Yeah, maybe they see the states moving forward and being proactive, and they're probably getting a bit scared, so they gotta actually do something now.
But it's two states that actually put regulatory regimes in place. That's the point, right? And states that moved ahead but did not have regulatory regimes in place have, in a couple of cases, gotten pretty burned, unfortunately. So my advice to the states is don't move too quickly. Get the legal and regulatory regime in place, train your regulators, and then get started. That's the right way to go.
Yeah, it absolutely makes sense. A couple more questions. Any thoughts on the EU and their MiCA regulations, as well as the UK? It seems the rest of the world is moving full steam ahead here.
Yeah. Well, interestingly, they're moving full steam ahead on stablecoins. That was done in reaction to Facebook Libra. Oh, yes. So, and there again, the rest of the world is far ahead of the United States on regulation, on acknowledging that this technology cannot be stopped, is going to exist. And so the right way to deal with it is to create an incentive for people to deal with regulated institutions. If they want to watch it for fraud and they want to watch it for money laundering and terrorism financing and the like, by definition, it has to go through a regulated institution. And so by not creating regulated institutions, including for those of us who were literally begging to create regulated institutions to be let in, including Coinbase, for example, with the SEC, it's tough because a lot of this activity is going into the shadows, and they can't monitor it. They don't know how big it is, and it's not inside their regulatory purview. And I think that they're going to backtrack on that. They will have to, because it's just not going away. Yeah.
Yeah, it's funny because I see, Hong Kong and regulators and these other places are asking companies, U.S. companies, to come over. Forget about the United States. Come over here. It's fascinating to see this play out. It's like game theory.
Yeah.
All right.
Usually it was the opposite, that the U.S. was trying to attract the rest of the world's best and brightest. But that's not the case here. And we are losing a lot of engineers. I've seen that. We being the United States, I know we tend to be the Americans tend to be too U.S. focused, but in this case, I do mean the royal United States is losing some of the best engineers in this space, and they are going to Asia. And I am hearing about companies moving to Hong Kong. Really interesting.
Yeah. Final item here. Are you going to get your eyes scanned for WorldCoin tokens?
No. Nope. Nope. Not interested. Thank you. Just folks, remember privacy, and I think when you talk to identity folks, one of the first things they'll tell you is don't base your digital identity on something real world, that if somebody else can replicate a digital version of that, then you can never prove that you're you. It's tough. From the very beginning, when Bloomberg terminals went to thumbprints, I wasn't using those. I didn't want Bloomberg to have my thumbprint. I didn't know what they were going to do with it. So, I realize most others will just go right ahead and do it. But, now, at least with iPhones that have, biometrics, they don't share your data. At least they say they don't share your data, but I'm not so sure about everything else. I mean, heck, look at TikTok, right? So this is going to be I think a big issue for the next 5 years is, where is your data going? Who has access to it? And if you're giving your retinal scan, especially to a scammer, that you might end up being scammed. There were a lot of people, it looks like, who've been already scammed by scammers on this. Oh my. The human race needs to collectively educate each other that is not a good idea, and discourage people from using those.
And I was telling people, if you go watch the movie Minority Report, you can see how you can hack that in the future. I don't know if you have seen that movie with Tom Cruise.
Absolutely, yeah. Well, any of the movies of those ilk. Yeah, just how much governments can abuse it, and big tech, of course, can abuse it, because they'll just sell your data, right? So, and even if they don't sell it, maybe they get hacked, right? I mean, it's just But I mean, the cameras are getting good enough at this point that they can pick up a thumbprint from a photo. So this is a bigger issue, and it's scary. How are we going to protect identity? I know the answer is it's not going to be done through biometrics. It's going to be done through encryption and double layers of encryption, at least. Public-private key pairs paired to public-private key pairs. That is, at least at this point, a way that you can minimize the probability that you're dealing with a scammer.
Oh, sure. I know they're trying to solve like some other problems with UBI and so forth, and that's a whole other interview, I think. But I'll wrap it up here. Caitlin, I am excited to see the launch of the Bitcoin custody by you guys, and
thank you.
Yeah. But thank you for joining me. Always great info.
Yeah, I really appreciate being back, and we'll stay in touch. Thanks for having me.